What is going on, traders? Pretty boring day, but we do have some very important things to talk about. So you're going to want to stick around for this. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now we're looking at the Nasdaq daily time frame, and I've pretty much been warning about this potential move coming in like the past two videos, where at some point we're going to need to retest this 19,250, 19,300 range. And it is important to note that there is a daily supply and demand zone here, but I pretty much deleted everything because it was getting a little too clunky. But it is important to note that we do have a daily liquidity zone down here as well. So at some point, I do imagine that the NASDAQ is going to want to retest that. And it seems obvious that that could happen tomorrow. Now, speaking of tomorrow, it is important to note that we do have the Jackson Hole event tomorrow. Chairman Powell is going to be speaking at 10 a.m. Eastern. We have a few Fed members speaking, but more importantly, I imagine the market is going to want to pay attention to what Chairman Powell is going to talk about. And it's pretty much going to be treated as a FOMC meeting. So, the market is going to be interested in whether he's going to talk about rate cuts, what's going to happen with rate cuts, so on and so forth. So, definitely something you want to pay attention to. Now, I will say, with all the news that we got this week, it's been a pretty anticlimactic week. Monday was like, and this is Monday, by the way, this bullish candle right here. Monday was pretty much the only day where we really saw some real movement, and then every other day was pretty much a doji until today. And so at this point, I do imagine that we're going to start heading towards this fair value gap at around 19,300, 19,200. Pretty much mitigate this, and we could potentially head even lower than that, around 18,800. Now, I'm not necessarily counting on this move, but it is pretty much on the table at this point, especially if we give up the 19K range on the NQ. Other than that, do I think that this is a drop of all drops? I don't think so. I actually think another bounce, at least one more bounce, is going to be inbound. And at that point, I do think we do have the potential to see all time highs, if not previous highs. Well, we've already seen that on the SPY, but as far as the triple Qs, we haven't yet seen that. So I do think that at some point, maybe next week or so, we could be looking at all time highs being on the table, especially when we have NVIDIA earnings on the way. So this is the expected move or ideal move that I'm looking forward to. We haven't mitigated this fair value gap at around 20,300, 20,500. So I don't think that we're going to, have that huge drop that I've been talking about until we at least mitigate this area. And then we'll have to see what happens from there. It's also important to note that if we do just so happen to bounce from here, that we could be looking at a potential inverse head and shoulders pattern, and that would definitely be a signal that we could be looking at new highs. We will have a shoulder here, head here, and then a potential shoulder here if we just so happen to bounce around this area. A lot of turbulence here, so it is a good point to bounce from, and then the neckline will be at around 20,000, 20,030, give or take. Okay, so that's what I'm looking at in regards to the NASDAQ. ES, so ES pretty much looking at the same thing here. ES rejected this daily supply and demand zone, clear as day, super clean rejection here. And just like I said with the NASDAQ, Monday was like the most bullish day we ever had out of the whole week, despite all the news we got, which is really surprising. So that leads me to believe that we probably been pricing in a lot of this data that's been coming in already, and the market is just not surprised by anything, and the market just cares about what Chairman Powell is going to say. And if we don't really get much of a reaction to that, or if we get some huge sell off to that news, it could prove that we've basically been pricing in everything. So we'll have to see tomorrow. But regardless, as you guys can see, daily time frame on the ES, we've pretty much rejected 56. I said 5680 was my next target. We got pretty close to that, and then we rejected from around that range. So now it looks like we could be heading towards this fair value gap and mitigate it at around 5500. So that's a decent drop down on the ES, and we do have another fair value gap at around 5420 range, somewhere around the 5400s, that also need to be mitigated. So right now I'm focused on the 5500 range. If we give up 5500, then that could spell disaster. Okay, I will say that much. We give up 5500, then that could lead to some major trouble. But if we can just manage to at least bounce from 5450, 5430 range, then that leaves potential for an inverse head and shoulders, and then we could be looking at all-time highs all over again. Now you guys know my target as far as the SPY and the triple Qs. If we do see all-time highs, the triple Qs, I'm looking at 510. The SPY, I'm looking at, what did I say? SPY for, no, 580. Okay, so 580, and then Q's 510. The highest I think SPY could go is 600. But we'll focus on the first target first before we start talking about anything beyond that. So that's what I'm looking at as far as the ES. So let's talk about the triple Qs, and then I'm going to show you guys something that I think is really, really interesting here. So triple Qs, I pretty much kept everything. As you guys know, we've been trading in this channel for about a year now. Bounced here. Let's actually zoom out a little bit more. We bounced here, and then we somewhat consolidated here. We broke down, and now we're back in this channel. Again, we've been trading in here for about a year, and then we broke back in and we rolled back in. And as you guys can see, we actually zoomed in and look what we're rejecting off the triple Qs. We're rejecting this fair value gap. Huge bearish engulfing candle. We rejected this fair value gap. Not only did we reject the fair value gap, but we broke below this daily supply and demand zone. So that only tells me that we're going to head much lower heading into tomorrow. Okay, lowest I'm looking at is about 470. Well, not lowest, 470, and then I'm looking at a move towards 464, 465 range. Lowest we could potentially be looking at is around 457, 458 range. And it will be the same scenario here where we could be potentially form an inverse head and shoulders pattern where we head down here, and I wouldn't be surprised if we do bounce from here and just so happen to roll back into this channel. Bears definitely got trapped. And then you will be looking at an inverse head and shoulders pattern here. You will have your shoulder here, your head here, another shoulder here. That's only if we bounce from this fair value gap and head back into this channel. That's the only way that bears will get trapped in this area. So this is something I would definitely want to pay attention to. But right now, I do think we're going to see more downside tomorrow. I just have no reason to believe that we're just going to, uh, I guess, bounce up immediately from here. And then I imagine the market is going to start reacting once Jerome Powell is done speaking. So, and then we'll see what happens from there. So, yeah, fair value gap, we rejected it. We broke through this daily supply and demand zone, liquidity zone. We are breaking further down. It looks like we want to mitigate this fair value gap at around 470, 468 range. And then we could possibly head lower to all the way down to 460. We look at the SPY, and this is where things get very interesting, right? And so the SPY, so we zoom out. We're on the daily time frame, by the way. So we zoom out, and as you guys can see, we've been trading in this channel for about a year now. I've been showing you guys this in multiple videos, but this is just for more so for the new people who are new to the YouTube channel. We bounced here, we consolidated, we broke down, and then we broke back into this channel. Now we're at the bottom of this channel. And so we want to see the SPY hold 555 tomorrow. If it can't hold 555, then chances are we're heading to 550 and then 544. And so 544, ironic enough, is right where this fair value gap is, that needs to be mitigated, and this daily supply and demand zone. If we break below 544, or at least we'll say 540 psych level to be safe, then we're heading towards 537, and then there is a good chance that bears could get trapped here, and then we start heading towards all-time highs. Now, again, I want you guys to remember, if mark this channel on your charts, by the way. I want you guys to remember the only way that I think that all-time highs is on the table, if we just so happen to break further down, is if we break down, mitigate these fair value gaps, hold this area here at around five, I would say 537, 538. And don't get me wrong, I'm not saying this is going to happen tomorrow where we're just going to drop all the way to 537, but I am looking at a potential move to 550 minimum and then 544. But if we just so happen to break down here and bounce and roll back into this channel once again, then you're going to see an all-time high video coming out of me. All right, you're going to see that happen. Okay, so I just want you guys to keep that in mind. Now, keep in mind this is the daily time frame, so obviously that whole thing won't happen in one day. You probably won't see this happen until next week if it does happen. And then again, you'll be forming a possible inverse head and shoulders pattern where you have your shoulder here, your head here, another shoulder here. And at that point, you could be looking at a move all the way to the top of this channel, which where I got my target from, 580. Highest we're looking at is 600. Now, this is where things get very interesting. So we're going to go to the 3-month time frame. Bear with me here. It's going to look hideous at first. And so we're going to go to the 3-month time frame, right? And we're going to pretty much expand this. And so this RSI, right? So this is one of the indicators I use. Link is in the description below if you want access to any indicators I use. I turn this on like here and there. I try to use like 2 indicators at a time. I don't try to turn on all of them at once. I definitely don't turn them all on at once. And so what do you guys notice here? So right now we're just extremely overbought on the 3 month time frame, right? But this can play out for a very long time because it's the 3 month. And so, mind you, we're looking at the SPY, and look what happened here. We peaked all the way up here, and mind you, we're very overbought on the 3 month time frame. And the average trader wouldn't be looking at this at all. I find this very interesting. What happened? So we pretty much hit the top of this range here at around 42.25. And then look what happened. Look what happened. We sold off dramatically, right? Same thing. And right now we're back at this range, okay? And ironic enough, we did started to see a sell-off today. And so this leads me to believe that we could be looking at another scenario. Now, I want you guys to remember, I've been saying this in the last few videos. September, October are the most notoriously bearish months out of the year. And November is partially bearish too. All right, I had to check on the historical data on November. Feel free to look it up yourself. But we know for a fact that September and October is notoriously bearish. Do the math here, guys. Do the math. That's 2 months. And we're looking at the 3 month time frame. If we're to assume that November is going to be bearish too, I mean, we could be looking at the same scenario all over again. Something to pay attention to, right? And so I really want you guys to just really remember this. And I'm going to show you guys this. Let me know if you guys like seeing things like this, because I know a lot of traders don't, look at higher time frames like the monthly, 3 month, and things like that. I do. I just don't really talk about it. And so we could be looking at a top scenario real soon. All right, we could be. So something to keep in mind here. And so I want to look at the VIX real quick. So we're going to minimize this. So we're going to minimize this, and then we're going to look at actually not the VIX, we're going to look at the triple Qs. So we're going to go back to the triple Qs. And so this is probably why we have more potential to the upside. I clicked the wrong one. Here we go. So this is why we possibly have more potential as far as upside goes on the triple Qs. Right? Again, we're looking at the 3 month time frame here. And look where we are. Okay? Look where we are. So the triple Qs peaked all the way to about 54.65. And we could be looking at a lower high here. That's very much possible. And maybe the SPY is like double topping on the 3 month time frame. We could be looking at some type of bearish divergence here because we are kind of curling over, right? And so we could see a move like this. Trying to mark it. Here we go. We could be seeing a move like this where we form some type of bearish divergence, all right? And then we start to head down. So something to really think about. So that's really what I wanted to show you guys. Now we're going to get into other things. Of course, we're going to get into the VIX and all that. But this is something I really want you guys to keep in the back of your mind, where the SPY is pretty much double topping, for lack of better wording, is in regards to the RSI. Top here, and then right now we're slightly rolling over, and then the triple Qs is slowly rolling over, and we could be looking at the top now. All right. Now, I'm not saying it's guaranteed or anything. We should definitely wait to see what Jerome Powell says and see how the market digests whatever news that comes in tomorrow. And we should definitely wait on Nvidia earnings. Okay. So I just want you guys to remember this. Okay. But I want you guys to keep in the back of your head after looking at this that September and October are notoriously bearish. So I think we got the point. I'm not going to drag this on any longer. Let's pretty much minimize this and then we're going to move on. So let's look at IWM, which is essentially the Russell. So I've been showing this in the Discord to members because we are in 205 puts and 203 puts, I believe. The 205 puts, I believe, I alerted, and the 203 puts, the AI bot alerted. So pretty much confirming that we were in a solid play. Correct me if I'm wrong. I might be wrong on who alerted what, but regardless, we're in these plays. It doesn't matter. Okay. Right now, we're pretty much in profit on these plays. I'm up about a good 600. I'm sure Discord members are up a decent amount unless they got in the play late. But right now, what are we looking at on IWM, which is the Russell? We're looking at a bear flag. We have our pole here, and then we have our flag here. Okay. And so if we break below 212, we're heading towards 208. We'll say 210 site level and then 208. So if we just so happen to break below this, we're going to head towards this fair value gap. And mind you, we're looking at the 4 hour time frame. We'll get to the daily time frame in a bit, but we're heading towards this fair value gap, and we could potentially, well, we will mitigate it at around 208, 209, and then around 207 as well. And then there's another one down here, which is pretty much mitigated, but I definitely think that at some point we're going to head towards the 200 daily SMA, which is around 200, 198 range. So let's look at the daily time frame real quick, make sure I didn't miss anything. Now, keep in mind the bear flag is a bearish pattern. And as you guys can see, we got a long way down. Okay, we got a long way down towards that 200 range. So something to really pay attention to. And I believe I saw something on the weekly time frame as well. Yeah, so right here, let's zoom out. I believe I showed you guys this before, right? So right here, we rejected here, rejected here. Let's actually zoom in, get a better view. So I didn't mark every single rejection point, but hopefully you guys get the idea, right? We can actually use this. So rejection here, rejection here, rejection here, rejection here, rejection here. Then we pretty much broke out, and then Bulls got trapped, and then we broke down again, and it looks like we're retesting it. And currently, we're rejecting this once again. All right, we're rejecting this 217 range once again on the weekly time frame. Now, granted, the week is not over, so I want you guys to keep that in mind. We could potentially just break out of here. I'm not really counting on it, but it's on the table. Okay, so the week isn't over, so we can't jump for joy yet. But right now, we're currently rejecting this. All right, so I want you guys to keep this in mind. So this is a very, very strong level. It's on the weekly time frame, guys. We go to the daily time frame, and as you guys can see, we're forming a bear flag leading into this. So the Russell has to make a decision soon, tomorrow most likely. And if we get bad news or whatever the case may be, this thing is going to tank. All right. It's going to tank. And it's been showing signs that it wants to tank. It just needs the market to back it up. All right. The market keeps climbing or consolidating, and the Russell is just slowly trying to break down. And we've been seeing this all week. And I've been mentioning that. I mentioned this in the last video as well, I believe. So something to pay attention to here, guys. You got your flagpole here. If we actually do the measured move of this flag, so what you do is you drag the flagpole down to the breaking point. It hasn't broke out yet, and then this will be the measure move all the way down to 180. I don't know if that's going to actually happen. I would love that. That would be a lot of money for the Discord, a lot of profit for the Discord. But right now, my target is about 198, 200 on the Russell if we just so happen to break below this. All right. So that's something to pay attention to. Now, let's look at the VIX. So honestly, guys, I haven't paid attention to the VIX today. I know a lot of us are in calls in the Discord. We all just like kumbaya and just said, yeah, let's jump into some calls on the VIX. But in regards to the VIX, like I've said, the VIX wants to break higher, and I still have a target of 25. Max we could be looking at is about 30. And right here, I told you guys in the last video, literally told you guys in the last video that at some point the VIX is going to head towards 17 to mitigate these fair value gaps. So I'm really glad this happens because this shows you just how powerful fair value gaps are. All right. And I usually don't show this on the channel, but somebody recommended and was just like, you know what, I like them, show them. So I just don't like my charts being too noisy for YouTube. I don't like them being noisy at all, but it seems like it's working out fine. No one's complained yet, so we're gonna keep this going. So 17, I told you guys about 17 being a fair value gap, and we're here. Okay, we are here. We pretty much mitigated this whole fair value gap, and so our next target, if we get bad news tomorrow and we just so happen to break out of this channel, so let's actually zoom out. And I told you guys about this channel last time. And if we break out of this channel, the VIX is going to go crazy. And that's exactly what happened. It went all the way to 65 when it broke out of this channel. So don't let no one tell you that you can't plot the VIX. You can plot the VIX, okay? Because I called this out clear as day. I didn't say 65. I didn't think that was going to happen. But I did say if the VIX break out of this channel, things can get crazy. And so if it breaks out of this channel again, we could be looking at another scenario like this. Now, I don't know if it's 65 or whatever the case may be, but the first target I'm obviously going to be looking at is this 20 level, 2022 range. And then highest I'm looking at is about 25, between 25 and 30 range. We know the VIX can like spike all in this range. So something to pay attention to. So our first very fair value gap was at 17. Our second one was around 2023 range. And I believe there was another one on the 4 hour time frame that was much higher. Let's zoom out and see. Yeah, so there's another one. This one is actually pretty much mitigated, but there's one at 25, 27 that hasn't been mitigated. So I imagine we're going to head there. sometime tomorrow, if not next week, and we'll see what happens from there. So that's what I'm looking at in regards to the VIX. Also on the VIX, and I forgot to mention this in the last video, this yellow line right here, this is a weekly liquidity zone. Weekly liquidity zone. This line is at about 14.8, guys. This is a weekly liquidity zone. And so if the VIX doesn't respect anything else, it respects liquidity zones. As you guys can see, we have bounced here. We bounced all in this area here. We played games here. We played games. Sure, we played games. It's the VIX. That's fine. But this is a very important area. And notice how I said zone. So it can play games here. It's not support or anything. You can treat it as support if you want, but you treat it like a zone. Okay. Supply, you guys hear me say it all the time, supply and demand zones. Okay. Zones are like this. So the start of the zone will be here where these guys kept bouncing off of, and then the bottom of the zone will be here where these guys kept bouncing off of. And as you guys can see, we zoom in, we broke out of this zone, we retested it multiple times. So here, hopefully you guys can see the wick here, but there is a wick here, so trust me. We broke out, we came back down, we retested the zone, this huge red candle right here, retested the zone, and now we're rejecting it. Not to mention there's the 200 daily SMA right here that we're rejecting. So we're not only rejecting this weekly supply and demand zone or liquidity zone, we're rejecting the 200 daily SMA on the VIX, and we have been continuing to go higher. I'm telling you guys now, the VIX wants to break out. Okay, I have no doubt in my mind about this. If you doubt me on anything else, do not doubt me on this. The VIX is wanting to break out. It's in a perfect spot to do so. Okay, when that happens, I don't know, but something bad is coming, guys. All right, something bad is coming. I don't know how bad. Bad is all about perspective. Whatever you consider bad is okay. But regardless, the VIX wants to break out. It's at a perfect spot. All right. Now, one thing you guys seem to like is me going over options chain. So I'm going to try to implement this in my videos more, but I can't make any promises simply because the videos will be way too long. So we're going to do our best here. And we'll just see how this turns out. But we're looking at the SPY on the on unusual whales, because some people were asking me, what are you using as far as options chain? And I say this all the time, guys. If you are not using an options chain when you're trading, you're pretty much going into a fight blind, okay? And your opponent is institutions. Your opponent is hedge funds. Your opponents are the ones, the millionaires and billionaires that move the market. You want to trade with them. You don't want to trade against them. Okay, that's what you don't want to do. Okay, so you want to trade with the guys that are moving the market. Otherwise, like I said before in the last video, you're trading with one eye closed. So get you an options chain. It doesn't have to be on unusual wells, but I recommend this to every trader. Get you an options chain. That way you're not blindly picking random contracts and wondering why time decay destroyed your contract within 24 hours. You want good contracts. You want to be in the contracts where these guys are in. So that's my little rant there. So hopefully someone takes it seriously. But in regards to the SPY and the options chain, right? There's not, this is why I think there is potential for one more bounce, guys, because no puts are flooding in. Okay. Despite what we've seen today, usually when we have some huge sell off, you start seeing nothing but red. And we're not seeing that right now. There's a mixture. Maybe they're hedging. I don't know. Maybe they're hedging for Jerome Powell, whatever the case may be. And maybe tomorrow we really start seeing this thing light up red. But right now, there's just no signs. So I want you guys to pay attention here. So we have 563 calls, and this is for today. These all expired today. So a lot of, somebody was saying, millionaires do this and millionaires lose trades, guys. Okay, they lose trades. But what makes them millionaires is they hedge their positions all the time. All right. So I want you guys to keep that in mind. But everything expired today as far as calls. These guys got absolutely destroyed. Okay, they got absolutely destroyed. So even though you're using the options chain, you want to make sure it matches with your fundamental analysis or your TA, your technical analysis. You don't want to just jump into any contracts blindly. You want to make sure it matches your sentiment. And so these guys got pretty much crushed. All right. So someone did 565 calls. Maybe they closed out. Who knows? But they did 565 calls that expired today. 559 puts that expire today, so on and so forth. Then you have 560 calls that expire tomorrow. So there's no real signs of a sell-off or like a major sell-off coming. And it can change. It can absolutely change. Maybe Jerome Powell speaks, and then we just start seeing the market go absolutely ballistic to the downside. It is possible, right? And so there's not much to go off of here. We look at the triple Qs. It's pretty much the same thing. We look at the triple Qs. We got 475 puts that expired today, so everything just pretty much expired today. There's nothing really that's significant that's coming in for tomorrow, guys. So I just want you guys to know that. But one thing that we want to pay attention to is one, the IWM, and second, the VIX. Here we go. It's going to keep doing this now. Here we go. Thank you. Thank you. Thank you. All right. There we go. So a lot of puts have been coming in for the IWM. I will say that much. Now we do have some calls here and there, and I know you guys can't see the premiums, but they're majority of them are $1 million plus premiums. So right here is very significant. October 18th, 204 puts. 191 puts 10 for October. What do I tell you guys? A lot of these puts that's been coming into the market, whether it's IWM, whether it's SPY, whether it's triple Qs, even it's the VIX calls, a lot of them that's coming in are coming in for the month of September and October. Okay. And once again, what months are notoriously bearish? September and October. So a lot of these puts that's coming in and calls and whatever the case may be, that's all coming in are for the months of October or September. So I just want you guys to just remember that. I'm going to keep saying it until it clicks. Okay. So as in regards to IWM, there's nothing really crazy in regards to calls. Majority of this stuff is for puts, and those are the most significant contracts that we're looking at. You have 206 puts for 11th November 15th. You have 214 puts for August 28th, which is next Wednesday. I even showed the Discord that there is we actually can look at quant data actually. So let's look at quant data. This is another tool I use to see the exposure on contracts in regards to whatever stock I pick. So August 22nd. So let's look at August 28th. So this is how I correlate the contracts that I'm looking at and make sure that, I just use this as confirmation for lack of better wording, right? And so right here, look at the put exposure for what is this? 208. 208 for next Wednesday. All right. We look at unusual whales. And as you guys can see, I think I lost it. I just lost it that fast, didn't I? Yeah, I lost it. All right. So, regardless, hopefully you guys can remember what I was just saying before, where we have puts that's coming in for August 28th on the IWM. Okay. So, I just want you guys to keep that in mind when we're talking about downside. That IWM looks like it wants to drop, and there are significant numbers of puts that's coming in for September and October. I also want you guys to remember that the expiration date, just because it's in October, doesn't mean it has to happen in October. It can happen tomorrow. Okay. It can happen any time, guys. So I want you guys to remember that. Let's look at the VIX, and then I'll get you guys up out of here. Let's see what happened today on VIX. I actually didn't even check today. VIX, 85 calls. I really want to see the premium for this. It's probably low, but we'll see. If it's high, then that's crazy. Yeah, so only 200K. Nothing too crazy. But yeah, nothing too crazy on the VIX in regards to today. You have 21 calls for next year. You have 21 puts for next year. So this is pretty much like a hedging position, it seems like. But other than that, nothing too crazy for today. But like I showed you guys in the last few video, or last video actually, there's nothing but calls coming in for the VIX. We talked about yesterday, nothing but calls. 5 million premium for the 24 calls, 2 million premium for the 31 calls, October, November, September. This is in the money play, but regardless, whoever's in that, they're definitely in profit. We look at August 20th, same thing, guys. I mean, and look at all these calls coming in, and look at the dates they're coming in. October, 7 million premium for October, 30 call, 29 call, 3 million premium, 35 call for December, 2 million premium, 15 call. This is in the money for October. 20 call. This is for next year, but regardless, hopefully you guys get the idea. So overall, things are not looking good for the near term future. All right, they're just not. Now, I do think we have potential for one more bounce. Am I going to? I just wouldn't put all my faith into that bounce, okay, or that bounce happening. Okay, tomorrow is going to be a very important day. So I want you guys to really pay attention to that, see how the market digests the news, and then we'll go from there. But for now, in the short term, well, I wouldn't even say in the short term, but in the next few months, things are looking a little sketchy. I will say that much. I'm not going to say completely bearish. We haven't got Nvidia earnings. We haven't seen what Jerome Powell said. We haven't seen any rate cuts yet. So we'll have to see what happens. But other than that, guys, hopefully you guys got something out this video. Be sure to like, subscribe, comment your thoughts below if you agree, if you disagree, and don't get butthurt if I respond to you. Like, if you're going to comment on my videos and we have a debate, please don't get upset. Like, that's insane to me. So that's all I want to say. Discord link is in the description below if you want to get access to our plays. We jumped into some decent plays for the long term. So if you want access to those, join the Discord link in the description below. Other than that, that's all I have for this video. Until the next video, traders, have a good one.